Okay, so we'll be uh, analyzing these transactions into their debit and credit parts. But first, let us try to pause the initial balances. So for cash, we have 180,000. So I already have prepared here my T accounts. So assets, the balances for asset is the debit or the left side. So we have 180,000 for cash, and then supplies for 70,000. Also on the right left side or on the debit side. And then we have repair equipment 250,000. Office equipment 150,000. So these are all for the assets. The next we have the liabilities. So we have 12,000 for bill May company. So this should be 12. So the liabilities, the balance, normal balance for liability is the credit side or the right side. Then we have fail equipment company 200,000. Also on the right side. Then we have Reynolds Supply Company 40,000. And then capital 398,000. Okay, the other accounts usually starts with zero or blank at the start of an accounting cycle. So you notice they have no values yet. So let us now plot our or pause our first transaction. So it says here paid cash for month's rent amounting to 45,000. So with this, what are the accounts that are affected? So these are cash and rent expense. So this is rent expense. And cash is of course asset and rent expenses. So if we paid cash, that will lessen our cash. And to lessen an asset, you have to place it on the right side. So we have here 45,000. This is transaction number 1. Should be general. Okay, and then we have rent expense. It will increase the expenses. So to increase expense, it should place on the debit side. So we have here 45,000 for rent expense. Okay, so that's transaction number 1. Again, we paid cash, so our cash will decrease. So that means it is on the right side or the credit side. And we paid for expenses, so expenses will actually decrease our capital, or that means to increase expenses, we have to place it on the debit side. So that's for transaction number 1. For transaction number 2, receive cash from sale of an old piece of repair equipment amounting to 3,000. So we receive cash. So what are the again, what are the accounts affected by this transaction? We have cash and repair equipment. So both are actually assets. And we receive cash, so that will increase our cash. And that means we have to place it on the debit side. And our old piece of repair equipment, we have to give this equipment because we have sold this one. So that will lessen our repair equipment. And for an asset to decrease, we have to place it on the credit side, so amounting to 3,000. So transaction number 2, 3,000. And for repair equipment, it will lessen our repair equipment, so we have to place it on the credit side. So that's transaction number 2. Let's remove the decimal places here. Okay, so transaction number 2, again, repeat, we have to debit cash and we have to credit repair equipment. So cash will increase and repair equipment will decrease because we have sold our repair equipment. Then transaction number 3, we receive cash from sale of old broken chairs used in the office, so amounting to 5,000. So it is quite similar with the previous one, but for this, we actually sold office equipment amounting to 5,000. So we receive cash, so it will increase our cash, so that will be on the debit side. But we have given away old broken chairs, so that will decrease our office equipment amounting to 5,000. So we have to place that on the credit side. So transaction number 3, 5,000, we receive cash, and then office equipment, we gave away office equipment amounting to 5,000. So that's transaction number 3. Okay, so again, we debit cash and we credit office equipment. Let's proceed to transaction number 4. Receive cash from day sales amounting to 12,000. So what are the accounts affected by this? So we have cash, so we receive cash, and sales is our revenue, so sales. So we receive cash, it will increase our cash, so that will be on the debit side, and it will also increase our revenue, which will be on the credit side. So transaction number 4, we have 12,000 cash, and we have sales on the credit side amounting to 12,000. So that's transaction number 4. Okay, so that's transaction number 4. So I'll repeat, we receive cash, so that will increase our cash, so you have to debit that, and we also increase our sales, so that you have to credit sales, so amounting to 12,000. And then next transaction, we have paid cash for part of amount owed to Reynolds Supply Company, 20,000. So we paid cash. So what are the accounts affected here? We have cash and Reynolds Supply Company. Cash is asset and Reynolds Supply Company is a liability. So when we pay cash, that will decrease our cash. So cash is an asset, so it should be credited. It should be on the right side. And Reynolds Supply Company, when we pay our liability, we decrease our liability. So we have to place that on the debit side. So Reynolds Supply Company, we have to debit that, 20,000. That is transaction number 5. Okay, transaction number 5, 20,000. And that will decrease our cash by 20,000. So again, it will decrease our liability, 20,000, because we paid cash for our liability, and it will decrease our cash. So we have to credit cash amounting to 20,000. The number 6, paid cash for a new repair equipment. So what are the accounts affected here? We have cash and repair equipment. So both are assets. So we paid cash. That means our cash will decrease, but we bought a new repair equipment, so our repair equipment will increase. So to increase an asset, you have to place that on your debit side. And to decrease an asset, you have to place that on the credit side. So we have to debit the repair equipment amounting to 20,000, and we have to credit cash amounting to 24,500 rather. So repair equipment 24,500. So that's transaction number 6. And we decrease our cash 24,500. Transaction number 6. Okay. So did I have the correct value? 24,500. So we paid cash, decrease our cash. So to decrease cash, you have to place that on the right side or the credit side. And to increase the repair equipment, it's an asset, you have to place that on the debit side. So 24,500. Then number 6. So we receive cash from the day sales. So if we receive cash, so what are the accounts affected? We have cash and sales. So we receive cash, cash will increase. So that means you have to debit cash, and that will increase our sales. So you have to credit sales, so amounting to 23,500. So to increase cash, we have to place that on the debit side or left side. So 23,500. And we're going to increase sales, so we have to credit sales, amounting to 23,500. So that's transaction number 7. Okay. Again, transaction number 7. We receive cash, so that will increase our cash. That means we have to place it on the debit side. It is from sales, so sales will also increase. So you have to place sales on the credit side. So debit cash and credit sales. Number 8, paid cash for part of amount owed to bill make company amounted to 6,000. So what are the accounts affected? We have cash, because we paid cash, and bill make company. So if we pay cash, that will decrease our cash, and cash is an asset. So to decrease cash, we place that on the credit side or the right side, and that will also decrease our liability. So to decrease liability, we have to place it on the debit side. So amounting to how much? 6,000. So we decrease our cash by 6,000. It's transaction number 8. So you have to place that on the right side or the credit side. And we have to decrease our liability. So that's transaction number 8. So amounting to 6,000. Now we are on transaction number 9. So we receive cash from sale of an old adding machine. So again, what are the accounts affected here? So we have cash, since we receive cash, and adding machine is an office equipment. So we receive cash, that will increase our cash, and that means we have to debit cash. So that's an asset. And old adding machine, so we have to give away our old adding machine. So that will decrease our adding machine amounting to 2,000, and that is also an asset. So you have to place that on the credit side. So 2,000 for office equipment. So number 9, 2,000 cash. We received cash, and then we sold an office equipment amounting to 2,000. So we have to credit that. That's transaction number 9. Okay, so that's an old adding machine. Paid cash for a new electronic calculator, 19,500. So we paid cash. So what are the accounts affected here? We have cash and office equipment. So since we paid cash, then our cash will decrease. So if to decrease an asset, you have to place it on the credit side or the right side. Now, we received a new electronic calculator. So that will increase our office equipment. And office equipment is also an asset. And to increase an asset, you have to place that on the debit side or the left side. So amounting to 19,500. So first, cash, 19,500. That will decrease our cash. But it will increase our office equipment. So place that on the debit side, 19,500. Okay, so that's all. We have now posted all of the transactions. Now, to get the balance, we just get the total for the debit minus the total for credit. That will be the new balances for each of these accounts here. Okay. So that's all for this video. Thank you very much for viewing.